Welcome back. This week we have some fantastic news, and that is that Bank of America has become bullish on uranium, giving you 8 different ways to play the nuclear supply chain. And I mean, that's fantastic news. So let's get into it. Bank of America Global Research has issued a Research Investment Committee, RIC, on the nuclear necessity. So we're going to take some excerpts out of it and review it and talk about it, and that'll be that. The third bull market for uranium. We are bullish on uranium and nuclear power. After a decade of underinvestment, a shortage is visible. Our strategists forecast 20 to 40% upside. Global demand is also rising, with 60 new reactors being built and 100 more approved. Resource nationalism, energy security, war and inflation echo the nuclear build-out of the 1970s and 80s. There's 8 ways to own the nuclear supply chain. From the raw matter to the end user, Bank of America analysts are bullish. Yellowcake owns physical uranium. Cameco and Kazatomprom are disciplined miners with 1/3 of global output. Constellation and Proforma Vistra have the 2 largest U.S. generation fleets. BWX Technologies is the sole provider for U.S. Navy nuclear sub and carriers, and BAE Systems is the global defense leader with, AUKUS upside. For diversified access to the commodity and others, the URA ETF trades at just 1.7 times book value. See our ETF update report for our details, and that's what we're going to get into. I'd also like to make a mention that I believe, I could be mistaken here, but I believe that Constellation, CEG, it was either, I want to say in 2022 they were up over 100%. It was either 2021 or 2022, and they blew the doors off of pretty much all the uranium miners, the entire industry sectors, subsectors, sub-industries, adjacent, tangentially associated. I mean, they were a top performer, and I have no idea what they're doing this year, but just an interesting note. Everybody being bullish on Cameco or Dennis or whoever, and here a utility operator outperforms massively everyone else. The policy shifts not yet priced in. 2 short-term bullish catalysts to watch. G7 countries can impose sanctions on Russian uranium. Number 2, leaders may embrace nuclear as net zero deadlines loom. After all, nuclear is the cheapest clean alternative on a full system all-in basis. Nuclear power also returns 75 times its initial energy investment versus 28 times for gas and 2 times for solar. That, my friends, is what we call return on energy investment, or return on energy costs, ROIC. What is it? Return on, oh boy. Anyway, I butchered that. So, some highlights. Recent policy measures enabling a global shift to nuclear power. Illinois State Senate lifted 30-year ban on construction of new nuclear plants. Finland, first reactor in Finland in 40 years and first to launch in Europe over past 16 years. And Japan, extended life of nuclear reactors. I would say this is the catalyst. This is the larger one. This is the one symbolizing and emblematic of the pivot and the phase shift occurring in the nuclear sector as a whole. And that is that they're extending the life of their nuclear reactors beyond 60 years, in addition to building new reactors to replace old ones. Then, URA for diversified market access. And one of the reasons that they're promoting URA, not something else, is because it's more liquid. And that's something to always consider in an investment, especially when you're making an investment to a broad base who has a lot of money. So the Global X Uranium ETF, URA, is in our view one of the best ways into a market otherwise unfamiliar to many investors, with a good balance between liquidity and diversification. It has the largest asset base versus peers and strongest inflows, $1.3 billion in the past 2 years, and the highest number of portfolio holdings representing energy, materials, and industrials in North America and Europe, and it owns a 18% stake in physical uranium. Returns, 30% tactical upside. Uranium has been in a bull market since mid-2016, the third in the short history of the commodity. Michael Weidmer's forecast of $65, that's where you derive the 30% upside, by the second quarter of 2024 is in line with the sharp sudden rallies that have been typical for this metal. Lawson Winder recently interviewed Bram Vanderest, blah, 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 who said the outlook for uranium as a carbon-free energy tool has never been better. Valuation, 1.7 times book value for Global X ETF URA. URA has the most attractive valuation of the 3 uranium ETFs listed today based on an EV to EBITDA and price to book ratio. URA also ranks as less expensive than similar sectors and industries. Only metals and mining, energy, and materials have lower EV to EBITDA valuations. URA trades at a lower book value than any comparable peer ETF, equity sector, or index. And as you see, on an EV to EBITDA, URA is trading at 11 times, NLR is trading at 12 times, and URNM, what I'm a holder of, is trading at 21 times. And NLR is, I believe, a predominantly utility-based ETF. They use it, they don't make it, they don't convert it. And then on a price to book, URA is trading at 1.7, NLR is trading at 2 times, and URNM is trading at 2.3 times. So Global X is trading at 1.7, and then the Sprout Uranium Miners is trading at 2.3. URA, the most liquid, greatest number of holdings. URA, I'm done talking about NLR. I don't care about it. So URA is in possession of 49 holdings. URNM is in possession of 39 holdings. Asset under management, which is one of the large considerations, I suspect, in regards to this. So the Global X is at $1.32 billion, and Sprout Uranium Miners is at $830 million, which is to say that the Global X URA is about, 36-37% larger, which offers more liquidity. Now, this beta to uranium is an interesting one. So URA is a 0.73 beta, while URNM is at a 1.07 beta. And I kind of wish, I'm not quite sure the exact publication date on this and how long it took. I mean, obviously they probably worked on it months in advance, but it would be interesting to see them introduce the Sprout Uranium Junior Miner ETF, the URNJ, and see where it pairs up with these. Of course, it's not been around that long and so on and so forth, so that'd make keeping constant your comparisons and controlling for variables a little bit more difficult. So URNM has over a 1 times beta to uranium. That's what I'm looking at. I mean, you do it your own way. I'm not going to get into the weeds about why I'm doing it the way I'm doing it. I feel like I've discussed that to some extent already. And here we go, some polling going on. 77% of Americans approve of using nuclear energy. Those who oppose is 23%. Those who favor, 77%, according to their research, which is interesting because we're going to show some other, I'm going to show you a Gallup poll in a little bit. So, majority of Japan, this is the big one, the majority of Japan supports restarting idle nuclear reactors. Those who favor, as opposed to those who oppose, finally have intersected. And those in favor, for the first time since 2013, favor, and they finally crossed. It's beautiful. That might be the most beautiful chart of today. Now, we're done with that. So we got 2 more things to cover. Of course, I should have put this one first, but it was too serious to get into things so quickly. And that is Legos. You should go to Lego. I'll put a link in the description below, and support this project. This is a Lego idea. You get to put up an idea, create it, and then if people vote for it and support it, then it gets passed and they go through tranches and stages of development, of more support and more time and development and refinement. And over time, it can actually become a real product. So here's your opportunity to support a nuclear power plant in regards to Legos. And then we can share the wisdom and education and introduce it into our children's lives and other people's children's lives. And then slowly you can assimilate a world, starting people off at a young age to appreciate and recognize the benefits of nuclear. And it all begins with the toys they play with and the model figurines that adults have in their homes. American support for nuclear energy, highest in a decade. So this is interesting because this chart shows strongly and somewhat favor is at 55%. The chart we just showed a few slides ago, I believe, 77%? So there's quite a gap there. And I'm more along the lines to, believe this. Anyway, overall, do you strongly favor, somewhat oppose, or strongly oppose the use of nuclear energy as one of the ways to provide electricity for the U.S.? And 55% of people said strongly or somewhat favor. And then allegedly 44% of people say strongly or somewhat oppose. And I kind of wonder if the other chart, the one that has 77% in it, offered a 5th category, which is neutral, don't care, or something along those lines. And then they lumped up that along with strongly and or somewhat favor. Because I would believe that. Now, a couple of other interesting things about this Gallup poll that shows you demographic changes and helps create some context and nuance and granularness to this all and helps you understand a little bit better. Overall, so Americans' opinions of nuclear energy by party identification. So Republicans floating along, doing their thing, going up, going down. Of course, all of them are. But more Republicans historically support it than Democrats historically support it, at least going back to 2001. And I would say 50% more of them. Of course, if 50% more in the sense of if 40% of Democrats support it, then that means 60% of Republicans. And if 20% of Democrats, then 50% more would be 30% of Republicans. So please understand that with percentages. Anyway, the point I want to note out here is that here in very recent times, there's been a radical inflection from 39% to 46% of Democrats supporting it. And that's kind of interesting because if you look back in the chart, there's only 2 other times when an inflection like that happened, and that's 2011, which seems like a weird time for that to occur. I think it would have inflected down a lot. I'm not quite sure why that's the case. And then 2005. So that's something to look at. But ultimately what it means is in more recent times, there's been a positive inflection of people thinking positively about uranium. You can see kind of bottomed out in 2016 and is, what do they call it? A higher high and a higher low. Americans' opinions of nuclear energy among demographic groups. In addition to varying by party identification, American support for the use of nuclear power in the U.S. differs by gender and education level. 2/3 of men, 67%, versus less than half of women, 42%, favor using nuclear power. College graduates at 63% are also more supportive of nuclear energy than those with a college degree at 51%, which is to say that men and college educated people are more likely to be pro-nuclear than the converse. And with that out of the way, we're done for the week. And this is my weekly performance and or lack thereof. Interestingly enough, somehow I actually managed to pretty much be flat on the week. I think the S&P was down like 0.5% on the week, and I'm up like 0.1% or something that's equivalent to a rounding error. And you know, is what it is. I did add KRE, which is the regional bank ETF, one of them, and added a position, see what happens, down 1.38%. That's a whole episode in itself, so I'm not even going to get started because I'm horrible at going on tangents, and I don't want this to be an additional 30-minute video, so I'll just leave it at that. That's something I did. I'm just letting you know what I did, because that's initially the inspiration of this entire channel, is me knowing people, letting people know what I did. So not necessarily the reasons behind it, even though I'd like to get into these things and so on and so forth, but those require their own videos sometimes. Transocean, being the dog it is, gas, which is natural gas, is actually doing a little bit better with the shut-ins that's been happening with the Canadian fires going on, but that's short-term volatility that I really don't care about. Uranium is actually bouncing back and, well, off of its lows for whatever prize that's worth. Valaris, offshore is just not doing well. I mean, it's not. On a short time frame, that is. Because, you know, if you go back, well, even from the beginning of the year, Transocean is up a fair degree. Tidewater is just bouncing around in a range. Everything's range. It's incredible. If you look at charts, Disney's back to like 2015 levels. The S&P has gone 2 years ago. The S&P was where it is today, essentially. And then it traded up. And then about a year ago, it then traded down. And then we're here today after it traded up, and we're break even. If you look at Amazon, if you look at so many companies, they've pretty much have erased Amazon, eBay, PayPal. Look at all these Chinese stocks, Baba, JD, just on and on the list goes. Vornado. Look at all these REITs, banks. I mean, banks pretty much before the past couple of months in regards to banks, they essentially, in large part, did nothing over the last half decade to decade. Well, not decade, half decade. 2015, let's call it, so in between. They did nothing. Well, I mean, they did stuff. They moved around. There was a volatile range they were in of you know, certain variants, but from point A to point B, the price difference is meaningless. I mean, now they're down, of course, but you have Vornado Realty, the real estate investment trust. It's beyond. I don't know what it's trading at, 1990 something levels now, because it broke at $20 when it broke $20 a few months ago. That was 2009 lows. There's numerous things breaking 2020 lows, things going back to 2015 levels, names trading below 2019's. Really, the last half decade has been wash. It's a wash in a lot of names. And I say all of that because you have to look at things in context and say, okay, well, the S&P's flat, even though it's like, well, what does offshore oil have to do with the S&P? And this is factoring in because, well, it's like 5 names in the S&P make up 35% of the S&P. But what I'm getting at is you can say, well, Valaris, Transocean, Tidewater, they've been flat pretty much since February. They ran up hard in January, and some are doing better than others, but for for the most part, they haven't gone anywhere so far this year. But the S&P really hasn't gone anywhere so far this year, except the initial run-up in January. So that's 1, 2, 3. We're working into the 4th month of it going nowhere. And then so you see mine, the offshore oil sector, done the same thing, hasn't really gone anywhere. So you could be frustrated, like, man, these stocks are not performing, they're just consolidating or doing whatever. But then you look at the broader market. Now, the Nasdaq's going nicely, I suppose. But it's also, in the past month, hasn't really done anything. And, not every month. Things don't have to do things every month. And yet again, you can just bounce around in a range within a certain degree of variance and just get frustrated, which a lot of people do. And then they try to trade in and out and they fail and they mess it up and so on and so forth. And there's all kinds of fake outs and false starts and false breakdowns. And it can get really frustrating for people. So gain some equanimity and conduct yourself in an appropriate fashion that's conducive with your mid to long-term goals. And I'll leave it at that. So thank you for watching and have a good one.